Good evening and welcome to the Australian Stock Market Show. My quote for tonight is by Peter Drucker, Austrian-American management consultant and educator, described as the founder of modern management, who said, "The best way to predict the future is to create it." So tonight, in our no BS approach to all things stock market, to help you take another step towards creating a better future for yourselves and your families, we will share our predictions on the hottest stock market sectors and stocks for 2023. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, how are you?
Fantastic.
This feels like the run into Christmas.
Are we running into Christmas?
I think you and I are. Yeah, we're going to get really fit, aren't we?
Absolutely. I went for a walk along the Yarra River today.
Did you?
Yeah, and it's down 2 metres, but it's still up 2 metres.
Oh, how's that?
You can't walk along some of the path.
Oh, really? Gosh.
Yeah, well, where we are anyway.
Yeah.
But it was up at least 2 metres from there. So, yeah. But I love your quote.
Mm.
I love your quote. I was talking to a student only the other day graduate actually, who signed up for Trading Mentor. Talking Wealth. They'll launch a Talking Wealth. And they were saying how much they love the videos.
Yep.
And they were talking about that, and they said, I love what you're talking about in terms of your goal setting and things like that with the experts and how
fantastic.
For years and years and years, you've just written your goals down, and then you go back and see them 4 years later, and you've got them all. And, and they said they never really thought of it that way, because that's what that quote's about. It's really about designing your own future and working it. But I'm so excited. I mean, now it's Talking Wealth launched. We're getting so many people subscribing and giving us all this feedback, and I love some of these interviews. They're really getting into some really cool stuff. So
that's so wonderful.
And it's nice getting that feedback. I know you and me have worked really, really hard interviewing these, with hundreds and hundreds of interviews, but we know they're good. But it's interesting. One thing I want to say before we move on is that it's really interesting, people's psychology is all of our students are subscribing for a year, but people that aren't students, they're all subscribing for a month.
Gosh.
Or a month at a time. What does that tell you?
Why is that? Do you think they'll actually get the value out of it, looking at it for a month?
Well, they will, because they're great interviews, but it's just interesting, the psychology. Obviously, students and graduates just trust what we do.
I'd want at least 3 to 6 months to have a good go.
Yeah, but I mean, students and graduates, they trust us. I mean, obviously, some people might have just seen this for the first time. They might go, "Oh, who's Dale and Janine?" And they just hedge their bets.
So they're used to what we deliver.
Yeah, but anyway, we need to get into the show, Janine. So before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a burning question that you might have been sitting on, then this is your opportunity to pick up your phone and give us a call now. The number you need to call is 03 from Melbourne 929 09988. That's 03 929 09988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, we're excited to be able to chat to you tonight, so make sure you pick up your phone right now and get dialing.
While we wait for you to call, it is the second Tuesday in the month, and this means that we take a look at the sectors in the Australian market. So let's get into the charts.
Okay, so you've got these are the sectors in the Australian stock market.
Oh, you know I love this part.
I know you do. That's your favourite part of the whole show, isn't it?
Look, talking about the sectors.
Are you being sarcastic?
No.
Oh, you genuinely love this stuff.
I am really, as you used to call me, a sick puppy when it comes to this sort of thing.
I know. So can we actually get into what's supposed to be on the screen now?
All right. Yes, we can. All right. Looking at the top of the leaders board, we've got energy up 48% for the year. Yep. And then utilities up around 10%, which is a great
that is interesting, isn't it?
Gain. And there's been some really strong gains in that area the last couple of weeks, and we're going to talk about that tonight. Financials is almost back to line ball. Can you believe that?
That's pretty good, isn't it? That is really
great to see. It's all setting up for what we're expecting next year. Materials down 3.5%. I was actually expecting and hoping it was going to be down more than that by now.
So was I. But hey, to me, the more it went down, the better the springboard for next year.
That's right.
That's pretty much what it was. But I'm actually not too disappointed at 3.5% down for the year so far.
Okay.
So.
All right. Look, industrials actually down minus 5% at the moment. We know that when industrials get going again, that really is a signal for the whole market. Consumer staples down 8%. Now we've seen Woolies and Coles really well off their highs, and I'm not liking the chart of Woolies at the moment. I don't know if you've had a look at it lately, but
not this week. Well, not in about 5 days.
Hasn't looked good recently. Healthcare, we're down around 10%, close to 10%, 9.82%.
Which is more than the market.
Yep, CSL's really been held back, of course, which we knew was likely to occur. There's some resistance overhead at the moment. Sonic Healthcare might be making a bottom soon, though. It looks interesting.
Yeah, not too bad, and I think ResMed's not looking too bad either in that sector.
Communication services, minus 13% there. That's with Telstra in there. Consumer discretionary now. Look, for tonight's show, I was umming and ahhing about putting consumer discretionary in there because we know that with interest rate rises that actually holds that area of the market back.
And we've got a couple more of those to go.
Yeah, so I'm in the first half of the year, I'm thinking that this could be a bit down, but right now we're seeing this is the bottom of the leaders board. So we're going to talk briefly about that later, but it's not one of the top sectors.
We're going to go into a lot more
night.
depth later on, aren't we?
Yeah, we are. Information technology down 33.8%. So that's really still well down, isn't it, on where?
Yeah, but I suspect I know what you're going to talk about later on in the show about information technology, but I don't want to preempt anything right now and steal your thunder.
I know the hardest part is that when we're talking about all these sectors that I can't throw loads more stocks in. We've got stocks in there.
I know there's so many, isn't there?
There is.
I am just looking through the top 100 stocks at the moment. I'm seeing so many nice things there, and I just get excited with all of that, but I know some people don't. So we're going to look at any of these charts now, or what are we going to do?
What we're going to do is look at our spaghetti chart first. So I just wanted to see short term. So this is obviously the sectors, and we're looking more shorter term mainly. So we're seeing how far. This is a really good example. This shows how energy is so strongly up at the moment, and how utilities has just turned back up in recent weeks. But we can see there that financials and materials have really been struggling to make a move up. Materials just sort of going sideways. Financials moving up in recent weeks, sort of in line with utilities almost, if you see those two lines there. Industrials is more or less flat as well. We've got a flat line there. And we're starting to see the All Ords make a move up ever so gradually. But of course, we've said financials and materials need to be rising strongly for that to really make its move strongly. We've got consumer staples as well in there. Consumer staples, Woolies, and but really uneventful at the moment as well. Healthcare.
Can I say something?
Yeah.
You know how people go, sector investing, I've got to have so much in every sector. And
can you imagine trying to do that?
Well,
you can't.
You can't do that anyway, but this is such a graphical representation
of why
this
you
chart
don't.
Of why you don't. Because if you had, spread evenly across all these sectors, you're going to actually decimate your return because most of your money's going to be in here
then you might as well pick the market.
Then you might as well just have the market.
Yeah, that's right.
So whereas if you had more energy and
well, can you imagine top 20 when the financials take off, given that top 20 is heavily weighted to that?
Yeah, so to me, this is a really good graphical representation why sector investing is actually CRAP.
Yeah, okay.
And why nobody should be doing it. And I know it's pushed by the big end of town, and that's what they do. And we don't want to do what they do we?
No, that's right. I mean, the sector invest according to the weightings. That's what you mean.
Yeah, correct. So anyway, is that it for what have we got?
All right. Yep, that is it for our thoughts on the sectors in the Australian market. Now it's time to get into our first email for the night.
Alrighty, our first email question is from Nicola, who says, "Hi Dale and Janine, love the show as always. Could you please take a look at Aristocrat Leisure? I don't own it yet, but I think I have spotted a good rule once it breaks resistance at 38.23. Would love to hear your thoughts from medium-term trade. Many thanks, Nicola."
Right. Well, Aristocrat Leisure has been held back for some time, hasn't it? Yeah. So we can see there on the chart that there's this high here, which is the high pre-COVID. I mean, can you imagine right now that Aristocrat Leisure is trading at the same level it was just prior to COVID?
Yeah, I actually talked about this yesterday in my market report yesterday. And I talk a lot about support and resistance and why it kills so many people. But anyway, I'll let you keep talking.
I mean, I think that I remember talking to someone who did the Trading Mentor course, and when they saw your discussion on the support and resistance in that, it just made everything fall into place for them.
Yeah, because people use it. I mean, obviously she's talked about 38.23 as being a good entry, and I don't think that is. You and me never, ever, ever buy on just support and resistance. ever.
That's right.
And yet people do it all the time, and that's why they get more hit and miss.
I like the fact that she's thinking.
I think it's great.
Big picture and looking for that. So,
I mean,
great. That's a positive. She's not just sort of jumping in and saying, I think I should buy it right now, which is great.
No, but she's picked that point, and obviously there's some sort of resistance there that she's picked it up. But I think you know, people should actually go back and watch my video yesterday if they didn't see that one anyway, because I do talk a bit about it. But I do like the choice. I just don't think it's a buy right now.
That's right, I agree.
That's all I don't think. But anyway, Janine, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got there?
Hi, Dale and Janine. This is Sri here.
Hi, Sri. Welcome to the show. You've got a question for us?
Yes. I'm just looking at a JIN, Jumbo Interactive.
Jumbo, yep.
Yeah, and this stocks looks quite good and going up at the moment. Yep. So just want your view, like, is it the right time to go into it or just wait for a moment?
So you don't own
really
the stock
love
at the
your
moment?
shows, guys. No. I don't own.
Okay, and what are you looking for? Short, medium, long term?
About like medium term.
About medium term, and why do you like the stock?
Because like this stock sells lottery and other stuff, and everyone is like crazy on lotto. They're not going to stop buying it.
That doesn't mean you should buy it, matey.
So that's why like this company got a like very good future, I guess. Yeah.
Yeah, look, I mean, I've been looking at Jumbo Interactive for well over a decade when I first saw their CEO speak at a microcap conference, and it's shot up like a rocket, and it's done exactly the opposite. But let's have a look at it. Janine's got it up on the screen, but thanks for the call. If you do want to be like Sri, make sure you pick up your phone right now and ring 92909988. Janine.
Well, when you liked this one originally, it did take off.
I loved it. It took off.
Then it really got hammered through this period here into the low when COVID hit. Actually, it was already falling strongly before that happened. But I don't know. I don't see any opportunity right now because I just think it's too early.
It's looking better, but it's not.
It's looking better.
It's looking better. I mean, the weekly chart's looking better if you look at it, but it still hasn't really proven it's going off. And I do understand people say, well, people like to gamble, and it is lotteries and everything else. So it's that sort of thing. And generally when the economy is more suppressed, more people gamble because they're trying to make some win some money.
Well, you'd think that, if that was the case, why isn't this stock booming?
Correct. That was the next question I had for you. Why isn't it booming? And so we still got to have rules around it. But medium term, it could be all right, but it hasn't proven it yet. But I do like the stock. Long term, I think it is a great stock. But looking at it, how volatile it is, you just have to have some good rules on it. But I
guess I'm not as convinced.
You're not as convinced. You're sitting on the fence, and it probably hurts your backside.
I'd say there's a lot of other stocks I'd rather look at and leave that out of it, please.
All right, cool. All right, well, I'll leave it up to you. That's it for Jumbo?
All right, yes, looks like we have another caller on the line. Rob,
No, they've just dropped all that. So let's go to a question, Janine. All right.
Okay, before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Robin. Dear Dale and Janine, thank you for putting on an awesome show each week for us. I really appreciate your efforts. Can you please review Ora Banda Mining outlook for mid to long-term hold? I'm watching gold stocks closely after your show recently. Keen to enter OBM possibly this week if gold starts to make upside moves after tomorrow's Fed announcement. Then what do you think, which ASX gold stocks have more chance to go up? Thanks, regards, Robin. There we go. OBM.
Interesting question.
A small stock.
Yeah, very small.
Has been quite illiquid at times, you would say, but maybe it's returning to a better time right now with a move up recently. But do you think this is a backdoor listing with the big gap in the chart there?
Look, it's possible. It is possible. I mean, obviously, I've never looked at this stock before because it's just too small for somebody like me or anybody to get in. It's like, but I just don't get people's fascination with these sorts of things. And just because gold may be going up and down doesn't mean you buy a stock.
Yeah. Okay.
Because the stock is not gold itself. But if you're looking at this, you can see obviously that date's June 2008. And that's March 2016. So that means it's got to be a backdoor listing of this stock back in 2016. So it's been trading it looks terrible, doesn't it? When you're looking at it, sort of.
Yeah.
Like
So
that.
we really can only look at the data after that.
Yeah.
At this point.
So it's quite volatile, and I understand why people have that fascination, because they can, make a lot of money really, really quickly
Well, because
if it
they
does shoot
think
off.
it's cheap because it's only what is it? Less than 10 cents.
Yeah. So
Yeah.
it's only got to go. It goes up 1 cent if they're making a mozza, but the chances of getting this right are less than 1%.
Yeah. Okay.
And most people don't have the skills to trade this sort of stock. So I don't agree with the strategy. And I know that sounds a bit hard on Robin, but I just don't agree with the strategy. I don't think anybody without any real super knowledge should be trading.
Look,
this
at the
sort of
moment it's going sideways, potentially could be sold off because of the way that it's going. Volume's dropped off though, which is a positive sign if a stock's trading sideways. I mean, if it goes back above, this is the daily chart now, if it goes back above that high, then, I mean, it could take off.
It could take off, but looking at this, now I was just going to show you the volume and how crappy it is. Because at the end of the
I
day,
think you
people
can see it from the weekly.
Look at this. I mean, that's a day where it just 179,000 shares. You get your calculator out right now, multiply that by 0.05%.
Yep.
And it's not a lot of money. So just because you can buy in doesn't mean you can get out of it at a fair price. And you'll see the stocks gap up and down. So I don't know. It looks a bit better, but I don't get excited about shit like this.
Yeah, I mean, if that was a big stock that had bottomed and was starting to move up, you'd be happy with it.
I'd be super stoked, but I think too many people gamble with their money on stocks like this. And I know that sounds hard, and I don't mean to be hard, but there's so many better stocks to do. And again, saying if gold goes up, I should buy gold stocks. No. And which gold stock should you buy?
Well, I think we've talked about this on previous shows where we've said, look, put the gold price against the stock that you're looking at and then see how it performs relative to gold. Now, this doesn't look anything like it to me.
No. So therefore, to me, that's what I'm saying is, you're better off, I don't think 10 cents is just like not even worth my time looking at pretty much. So, and again, I'm not trying to be rude to Robin. I think she's brave to, send us an email in. And anybody sending us an email in and calling the show is really brave. And I think they're fantastic for doing so. And I do appreciate all of that. But again, pick better stocks. We can't say it often enough. Pick better stocks. Cool. We've got another email, or yes, we do have another email. Sorry, it's my turn. Sorry. Here's me thinking we had a phone call. I just heard something in my ear. But now we do have a question from Josie, I think how you say it. He says, hey, Dale and Janine, I have really enjoyed watching your show for the last 8 months and really appreciate the time and effort you guys and your team put in to pass on your knowledge and skill. Well, thank you very much. And he says, my stock I want to talk about is Life 360, and I chose to buy this stock from your hot tip a few episodes ago. I had entered at $4.90 and set a trailing stop loss of 15%. It just triggered and it sold. I decided I still wanted to own the stock, so I re-entered at $6.77. Should I have done this, or in these situations, do I just walk away and look at a different stock to invest in? Kind regards, Josie.
All right.
You can say all that you need to say about this one.
I know you like this stock.
Well, this was August. I talked about this one, I think, August.
That's right. And I mean, I looked at this with interest, and I'm going to apologise if I've assumed incorrectly here about where you've entered, but it looks like somewhere in August the stock was trading at $4.90.
Yep.
And then hopefully, that Josie didn't buy it when it was actually falling, because I could understand.
I think the last 5 week month we had was August, and that was the last stock I did, I'm pretty sure.
Okay, you did that back around that time. But I was just thinking, like, we should cover both bases, because if she did buy it somewhere around here, then it's fair when it was falling, then it was fair enough to exit. But if the buy price was actually when it was actually going up in August, then there's no 15% stop loss triggering here, because it didn't come back and didn't go anywhere near that 15% stop loss, and actually kept on going up like a rocket. So I'd be really sad for you, Josie, if you'd actually bought it and then for some reason you've exited at the wrong price, because it's heartbreaking, isn't it?
Well, it is. I'm only leaning towards more recent entry back here in sort of. And I think if I recommended it around that week here, and I can't remember exactly whether it was that week or not. I didn't go and check the video, but if I entered that week, they entered in that week. You are right. It didn't go for 15%. So where did they buy it and have a 15% stop loss?
And this is really good to have a discussion about, because it's really important. I mean, I can remember people telling me that that when they'd bought a stock, they'd actually bought at the wrong price.
Yeah.
Some people bought the wrong stock because they typed in the wrong code. They actually bought at a price. Some people actually put in the wrong stop loss, so the order got filled at the wrong price, thinking that they were, put the right price in. But one of the things that we never do is actually put in the exit into a broking platform.
Correct.
It allows you the opportunity to think about what go through your strategy, look at everything that's happened, and then the following day you execute it if it's triggered. It depends on your rules though, and whether you work full time and whether you can actually do that. But these days most people have apps on their phones and are able to do things pretty easily.
Yeah, I think probably what you talked about, if they did buy in that sort of April 2022, that when it was that $4.90.
Then it's catch a falling knife.
And they've caught a falling knife, and I wouldn't have recommended it then, I'm pretty sure, but they've caught a falling knife, and then to re-enter at 677, it just...
Well, you're not actually recommending it per se, you're just talking about whether you think it looks good.
I think with that one I said it's higher risk and it's short term.
Yeah.
And a lot of people don't take a lot of that information in when we talk about a hot tip. They just, and some people do it weeks after we tell them. And then
I hope Josie's got your book.
I hope she does, because I wouldn't have bought it at 677, but hopefully she does right. So I don't like the strategy that she's taken, but hey, at least she's getting into the market and giving it a go. So I think, I'm assuming it's a she, it may not be. We can't be gender specific, can we? Cool. But anyway, thank you for the question, Josie. And Janine, it's now time to get into our topic for tonight. Geez, that came up fast.
Yeah.
But before we do, I think it's time for everyone to give the show a really big thumbs up and to show the team that they like and appreciate all the work that goes into producing this show each and every week. So make sure you click the like button right now and see if we can get the most amount of likes we've ever had. And I know 9 out of 10 of you don't even click it. Remember, it's just below and it looks like a big thumbs up. So click on that now. Last week, I was really pleased to announce as well, Janine, that Talking Wealth TV is now live. And as I was mentioning before, there are hundreds of interviews that Janine and I have done with really trusted experts from around the world on subjects of wealth, business, entrepreneurship, retirement, money management, mindset, and an absolute truckload more of different subjects. There's literally a wealth of knowledge, information, and education in these videos. And the feedback that I've got from people that have already subscribed has just been nothing short of excellent, because each week we'll upload more great interviews from these experts who, Janine, by the way, Janine and I have actually handpicked these, and not because they're someone who is really, really famous and have got a big database or they're the best marketers. We specifically chose them because they have great knowledge. They have also great education to share with everybody, but they're really good at what they do and they are amazing people to talk to. So rather than taking potluck, watching YouTube videos, you now have a really, really much better place to get great education and information from experts that you can really trust. So check it out now. Well, I don't think they should check it out right now. And wait till you finish this show and then go to the website talkingwealth.com. So that's talkingwealth.com. And oh, by the way, when you do get to the website, you can enter for your chance to win $50,000. So check it out and make sure you check out talkingwealth.com. Now, Janine, let's get into tonight's topic. And as Janine mentioned, it is all about the sectors with the highest probability of the best performance in 2023. We also pick the best sectors and you'll find the best stocks. So we'll reveal our thoughts on that along with 5 of the best stocks within these sectors.
Dale, this is going to be good. Can you believe it's that time of year? I mean, it's just flown. I just love doing the review in preparation for the year end. Yeah,
I know you do. And I'm going to enjoy seeing the market change as our analysis is indicating it will occur. So bring it on, Janine.
Well, Dale, more than happy to. You're going to be jumping for joy by the time this is over.
I don't know about jumping for joy, Janine. It's not really something I do, but it's not close to Christmas. But I am excited about the prospects for our market over the next year. And everyone knows that I am expecting the market to rise into next year.
I agree. The analysis is pointing to a stronger market, and this is actually the best time of the year to be looking at the sectors in preparation for the year ahead, as the market will often provide some great opportunities early in the year that we need to be ready for.
Yeah, so true, Janine. It really is so true. So what's really interesting to me is how many investors go straight for the stocks when they invest without considering the bigger picture, and this is to their detriment, which is why we teach our students to look for the areas of the market that are more likely to outperform and to pick the best stocks in these areas.
What I find of interest is that so many of the students said they had no idea how to do this before, and once they learnt it, everything became so much simpler and clearer. Think about it. You could buy BHP, but what if it was in the middle of a major decline? Just because it is a top 20 stock does not mean it will be the best performer every year. Let's take a quick look at a chart of BHP to demonstrate.
Okay, spot on, Janine. As you can see on the chart from 2011 to 2016, BHP experienced a long-term decline. Now, BHP fell by around 68.8%. Now, I know everyone watching, this should serve as a really important reminder of what can occur and why you need a process when selecting stocks and managing your holdings.
We are using BHP as an example, but the same goes for any stocks, even bank stocks, which we know a lot of people did not want to part with during the Royal Commission, but would have been better off out of them. Let's take a look at what happened to one of the big banks during the Royal Commission.
Okay, so we saw NAB and all the banks fall significantly in 2015 through to 2016. Now, NAB fell by around 37%. And this broke, I reckon this broke the love affair many Australians had with the banks, I think.
Yeah, I know. I think you're right there, Dale. Investors are now less likely to blindly fall in love with their stocks, no matter how good the dividends.
Now, what else are we going to share tonight, Janine? Remember, you said I would be jumping for joy, and so far I'm not even getting my ticklish feet going.
Okay. Well, Dale, I'm not going to comment about that. I'm glad that you asked, though. Firstly, it is important to discuss how the energy sector has risen by around 48% in 2022 to be the hottest sector thus far this year. But now investors ought to be looking at other areas of the market that are likely to perform best next year. And we've chosen a few for you to consider.
Okay, before we take a look at that, Janine, what was really interesting was how no other sector even came close to the performance of the energy sector, where and there were individual stocks in specific areas like coal that did really, really well. But if you didn't have exposure to any energy stocks, and particular stocks like Woodside, your portfolio is likely to have underperformed this year.
Now, Dale, banks did make a comeback at the end of the year.
Well, yeah, they did. And that was really, really good to see. But we do know that for our market to rise, we need financials and materials, which are the largest sectors on our market, to rise to the top. So we are going to take a good look at these sectors to reveal whether 2023 is the year this will occur. So can we get into showing everyone whether the market will be trading higher next year?
Well, Dale, I suggest we get straight into the charts to take a look how the sectors have performed so far and share the pick of our forecast for some of the best sectors in 2023. Let's go to the charts.
Woohoo! Okay.
All right, now we're looking at the financials there.
That's the financials, is it?
Sector, yes. The XFJ is the code. And we can see there that it looks, to me, fantastic.
It's still below 2007 high. Did you see high?
Yeah, I know. But look, I mean, I think it's just warming up.
But why do people have a love affair of financial stocks?
It drives the whole economy. It's backbone of the backbone of the stock market. The stock market wouldn't function without it.
I don't know. I hate the financial sector.
Oh, no, you don't.
Yeah, I do.
When you're getting paid, you like
money.
it.
I like making money out of them, but
That's
I don't.
right.
I know that.
Well, look, let them do their job. So what we're seeing here...
Isn't that an oxymoron? Their job is to take your money.
I think they're going to be bigger and better going forward.
Okay, so that means the more money they take from you, the more money they make, and the more money you can make from their stocks.
It's a business. They've got to make money.
I know that.
So let's get into it.
Okay, sorry.
All right, financials. Now we can see here, I always look, well, what we teach our students is to always look at the upside and the downside, because you need to be prepared in case something goes the other way and it doesn't perform as you expect. Now, financials has been a laggard, but it hasn't been hugely so. We've seen it recover towards the end of this year, which is, it started off towards the bottom and we were thinking, oh, this is going to be a, bad year for financials, but it's actually not so bad. I think that financials will make a recovery. There's a potential for 18% growth in financial stocks.
I think you're right too, but again, it's another example why you don't sector invest.
That's right. Financials, really, a lot of those stocks are just trading at levels where they've been trading years ago.
Yeah.
So, you know, if you weren't getting dividends, you wouldn't be in it the more.
It also shows you why buy and hold doesn't necessarily work that well either.
True. But look, what we're looking at here is once this sector goes through this level of 6,956, then I'd expect it to go up into this zone somewhere between 7,600 and 8,000 points. Now we can see that over time, if I get rid of that annoying thing, over time we can see how it's just tracking up the angle of this line here, but it depends on where you want to draw it. But I can see it trying to push back up there again to hit that line during 2023. Yeah. When exactly it gets there, we've got some dates which we'll update everybody on as we get into the year. But this is just an overview at the moment.
So there's quite a strong resistance around 7,000.
Yeah, look, I'd change my mind about it if it went through that October low though, of course.
Yep.
Okay. So that's financials. Now we've got materials, right? So we're looking at the monthly chart of materials. Now, BHP's the heavyweight, obviously, in this sector, and so the chart's going to look very similar to BHP, and to Rio, but more so BHP. So at the moment, BHP is a $200 billion company. It's not something to scoff at.
I've got that in the safety deposit box in my back pocket. No problems at all.
Yeah, so we're looking at the moment this sideways move, and we've said on previous shows that we've just been patiently waiting for BHP and Rio to make their next move down to this low. But it might not happen. We might see the mining stocks try to push back higher before we know whether a further fall's likely. At the moment, though, we're just sitting on our hands with it, but there is a huge potential. We're going to get to BHP and show what's there.
But again, this is another
forward.
Example. I mean, you know, we're only just above the highs of 2007 in this sector,
it's
but
crazy.
it trends well. I mean, it's been from 2008 right through to 2016, 8 years, it was going down.
That's right,
predominantly going down.
All this way from here.
Yeah, and it's like, you know, if you're holding
that's
BHP,
a long-term low.
Yeah, and
so when we see
BHP.
those sort of lows, we know that it's got to be up for quite a while after that sort of low.
Absolutely. So I'm long-term bullish on this sector, but it just shows you why, you know, why we keep saying buy and hold is not really the way to go. You know, if you pick the right sectors at the right time and the right stocks within those sectors, you're going to make more money. That's
right. I mean, once this next low is confirmed, if someone was going to buy and hold for the long term, you wouldn't have a problem, would you?
No. Not at the moment, no.
All right, utilities. Now we've got to have a look at the utilities. We can see there, looking at the long term, I'm just focusing on the low from the GFC.
Nice, doesn't it?
Yeah. I mean, it tried to track that angle, and of course during COVID and around 2019 we saw this huge sell-off. We've seen this huge change in the energy space. I just think that despite what's going on with utilities and government regulation and making all of this noise and beating their chests, I still think that this sector has a huge potential if it continues to move up into the first quarter of 2023 and hold up reasonably well, then I see further upside. Of course, if it took out this low here in October, again, you know, we'd be thinking otherwise, but we're talking about 15% potential to the upside, maybe 16, and then the sky's the limit once it gets through that all-time high.
So what's this beating noise and beating chest bit? What's all that about? Is it highly technical research that was based on, or?
No, it was based on me just using words that maybe I shouldn't have, because now I've distracted you and you should be focusing on the sectors.
Well, beating chest and noise, I'm like, it's the utility sectors, and it's one of those boring sectors, isn't it, really?
What is it with you, backsides and chests and things? I don't know. Like, you know, can we focus on bar charts?
I'm talking about
it's more interesting.
You brought them up. You said those words. I'm just asking you what that's supposed to mean.
Oh,
noise and
I have to take a break and have a drink now.
I'm asking. It's fair. I mean, people sitting there in their lounge room or drinking their beer or their wine and putting their feet up. They're going, Janine, why is somebody beating their chest about utilities?
They just want to know where they're going to make money next year.
Okay.
Shall we give that to them?
Where they're going to make money?
Yeah.
Okay, from us. Okay. That's where they're going to make it from.
All right, now we're seeing the utility sector there, so we're going to talk about a stock in that space. In fact, I couldn't squeeze all the stocks into this, as I said, that I wanted to talk about tonight.
This thing really trends really well. And
when it gets going,
it's such a smooth sector, and it's a great sector to find stocks to underpin a really good portfolio. And that's what I love about this utility sector, because it's consistent money coming in for a lot of these companies. Like, you know,
plus they're transforming their businesses.
Yeah, they are transforming their businesses at the moment. But when you've got utilities, it's, you know, they send out quarterly or yearly bills or half-yearly bills, and they're getting this consistent cash flow coming through. So it means the only thing with these utility companies is obviously expanding their size.
Yeah, okay.
That's the only thing, obviously. How do they do that? Do they open up more things? How do they take on bigger databases of consumers to
Good points.
give them money. That's probably the only thing, because if you're an electricity company and you're supplying an area that's got 10,000 houses in it, that's your database.
Yeah.
So how do you get 20,000? You've got to buy another one, or you've got to expand, or you've got to do something. So, but I love them for things like super funds, blue chip portfolios.
Well, there's going to be so much more development going on over the next 5 years.
Absolutely. But these are, what I was about to say is these are really good for super funds and like self-managed super funds. They're really good for things like blue chip portfolios that you really want nice steady growth without having heart attacks all the time.
Okay, I think people will appreciate that. All right, shall we look at the next one now?
We can.
Communication services. All right. So we're talking about Telstra dominating this. Okay. Now we know that a long time ago Telstra's had this bounce off the bottom, which is very similar to the sector chart. There's a little bit of variation in that, but very similar. And now we're on this trend that's more likely to keep going, and will eventually take out this high, we believe. But in the interim now, I think there's a 17% upside to this prior high for the sector, and about 30% to where, the top end of the zone that I'm expecting in 2023. But it could shoot those lights out. I mean, that's the potential.
Absolutely, it could. And I'm long-term bullish on Telstra. I think I hated Telstra for over a decade. I thought it was the worst stock on the market.
I know, you joked about it at seminars, calling it the dog stock.
It was the dog stock of the market for over 10 years. But I mean, again, looking at this chart, it just shows you why you shouldn't buy and hold, because back in we're only at the high, we're still below the highs of 2007.
Now, you never fall in love with stocks, but could you fall in love with Telstra?
No, but because I hate, as a customer, I don't use them because I just hate ringing them.
Forget that.
But
it's a question of whether they're going the right direction.
No, I love making money out of them. When I'm making money out of Telstra, and when I make money out of Telstra, I'm happy.
Right.
And that's what I talk about with the banks. People go, oh, I don't like the bank. I said, well, buy the bank. Forget that, buy the bank.
Yeah.
So go and do that. But I do like Telstra right now long term, and I do like this sector.
So we've got potential for 1,800 points as the upside.
I think this has got
once
a lot
it gets through 1658. Okay.
Yeah.
Now we've got information technology there. Now this is a question mark.
It is a question mark.
In the sense that there could be some downside in here still, but I just had a look at the long term angle of this whole thing, which, it varies depending on where you want to draw that line. You could say here and it's got downside all the way to that line. That's a possibility. Wow. But, we're looking at the bulk of this movement, and it seems to sort of be tracking through that line. This may be the bottom, and if it is, this is going to go ballistic, isn't it?
Well, people who watched my video last Monday on the information technology sector would know my thoughts on this. There's this really, really strong support at around that 1,250 point mark. Really strong. And so if it holds above that over the next couple of months and starts to move up, then this is my hot tip for the big move.
All right, then
I don't know about you, but that's my hot tip.
We'll look at one of the stocks in the sector, but at the moment we've got potential upside for around 30% in the short term in 2023. But
does that mean you're agreeing with me?
Who created this chart?
You did.
Right.
So I'm agreeing with you.
Just remember that.
I'm agreeing with you.
Okay, see this low here in October 2022? If it takes out that, then, my view will go back to the more bearish one. All right.
Too.
Well, that's it. There we go. That was it on the sectors.
Okay.
You're just sitting there waiting for me to put up another one. I could have put up all of them, and you wouldn't have known.
I would.
You were so engrossed, weren't you?
I was mesmerised. You mesmerise me all the time. But that seriously was really, really interesting. But I think, Janine, now it's time for us to share our stock picks for these sectors for the next year, because I know that I'm getting ready to jump for joy, because I think that was super exciting what I just saw.
Well, I thought you'd never ask.
Oh, okay.
I think our viewers are sitting on the edge of their seats waiting for this, and as usual, we have no intention of disappointing, so let's get into the stocks.
I think you don't disappoint people.
They only got to see your face for a few seconds and we're back into the charts.
Okay, well, what are we looking at? So we've got BHP, yeah? BHP.
Now, as usual, when we analyse a stock, monthly chart, weekly chart, so we can see what's going on in the big picture and into the shorter term. Now, BHP, I absolutely think this is the most fantastic stock. I think my concern at the moment is what's going on from a more legal point of view with it. So, that's a bit of a question mark for me at the moment. I did want BHP to take a dive, despite the fact that I really love this share. I think, I'd like to see it come back to this sort of zone, but if it takes out this month's low, then we know that's happening.
Okay.
But there's a 30% upside for BHP if it takes off, and we're talking about a 52.50 stock. possibly $62 as part of that rise. I'm just not sure whether that will be into 2024, whether it'll do all of that in 2023 if it takes off. But at the moment, shorter term, this move is more of a consolidation and it could drop out of that. So just keep watching it.
All right.
ANZ. All right.
ANZ.
Financial stocks, absolutely think they're great. While they're still going up, ANZ I'm excited about from the point of view of the takeover of Suncorp.
Yep.
Banking
I am
system.
too, because that'll be good for
But you just got to remember that it's only about 5 or 6% of their market capitalisation when they take this over. So, but what I like is the fact they're doing something to build growth. Right?
Yeah, because there's
What
it's
are the
more about
banks
the value.
doing
What
that?
value can they create by having it in their portfolio? And I think that's where the exciting part is for me.
So we're thinking angle of this one up around the $32 mark. There's a 30% upside from the current price, that is. But, you know, I'd like to see it get through the angle of that line that I've got coming down here. If it takes out this lower in red, then of course we're going to have a complete review of ANZ. The next stock is Telstra, which everybody's been waiting to see, and this is the one that we think has got significant potential, particularly in the short term, early in 2023. As long as it stays above that my red line there, which is $3.68, this one should continue to rise. We've got 20% plus on it. For the upside, at the moment it still looks sloppy. There's nothing happening there, and until it gets through that high in August 2022, the jury's still out on it.
Did you watch my recording yesterday on this?
Do I need to?
Well, no, because you pretty much hit my first target, and then I've got a second target around $6.
Well, if we know the same stuff, are we going to say the same thing?
Yeah, probably. Probably, but I do like Telstra.
All right, then Telstra we've got there as a potential upside. Okay, Origin is our next one. We can see there, this is not AGL, right? AGL is the one that's also got significant potential, and I was umming and ahhing about which one to take. At the moment, I'm not really excited about Origin, but that would change if the stock starts moving up, and this would be the initial trajectory, and then I think it would accelerate. I think once it starts to break that angle, I think it's just going to take off in that direction, but for now, it's being held back. So that's Origin and the way that it's unfolding. Let's just have a look at its shorter term time frame there. So a really nice settling back into this low, and now we just need to see it take off. AGL's also settled down, but it looks like it's got significant upside potential on AGL as well. But at the right time, it's too risky to go into these at the wrong time.
I'm interrupting you again, and you should slap me for that.
I don't think I need to get physical now, although people might like that.
Well, they might enjoy you smacking me across the back of the head and saying, shut up, Dale.
Yeah.
When we look at these and we get excited of stuff that people don't get excited about, because people should be asking a question, well, what are they seeing that I'm not?
That's right.
And the thing is, we get excited about stocks like this.
That's orderly. Even though that initial pullback on Origin was really swift, the way that it's unfolded since then is just what we want to see.
I think you're doing really well.
Okay, great. And then XRO we've got, which I didn't want to disappoint people because I know that so many of you love this or are really interested in the stock. If it takes out this low here in October 2022, and notice how October 2022 lows are coming up a lot. If it takes out that, then we're going down to about $60. But if it turns around and starts taking off again, then, geez, we're talking about between $98 and $100 as potential, maybe a little bit more even on the upside there. So just watching this one.
I agree. I like this stock. It's just a bit too early. So a lot of them are a little bit too early, but there's so many really cool patterns happening.
And this is only touching the surface. We've got heaps more to talk about.
I know, you could have put 100 in there, I reckon.
Into next year.
That's why we think it's really, really exciting. Anything else you want to say?
No, that's it from me.
Okay, well, that's it for our topic tonight. So thanks, Janine. I am jumping out of my seat. Now, before we do get into our next email, given that you are at this point in the show and still watching, it really does mean that what we are doing, that you do like it. So make sure you hit that like button now. Now, I also hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to call is 03 for Melbourne, 92909988. That's 0392 909988. So make sure you get dialing now. We'd love to speak to 2 or 3 people, and I know Janine loves chatting to people.
I would really appreciate it if people call in. It just makes it so much more exciting. And while you call us...
I'll be nice. I'll promise to be nice.
We will get into answering. Yeah, I'll hit him over the head if he's not. The next question, so call now. All right, our next email is from Lloyd. Hi, Dale and Janine. Could you have a look at Technology One? I don't own the stock, but have it on a watch list. It is up 34% versus the sector for the year and 2% versus the ASX 200. The stock has sound fundamentals and a positive forecast, waiting and watching for an entry. If the XIJ rotates back into positive territory, could the stock trade through its all-time high and continue on its way up? Regards, Lloyd. P.S. I love your jokes, Janine. Thank you so much, Lloyd. Oh, gee, that means I need to bring a big one on for next week, doesn't it?
No.
I got one person saying they liked it. There you go.
Good on them. Were they on anything when they said it?
And Technology One, I think we better get into the stock.
What were they smoking? Technology One. Okay.
All right. Now, the stock, does it look good, or do you think it's likely to go down? Do you want to take over?
Look, I think on a monthly basis when you're looking at it, look at this stock. It's just perfect the way it unfolds. It's looking really, really good. A little bit of indecision around that $12 mark and a little bit of resistance there, but look, I don't think that's going to stop this. It's just really just in a bit of a pause at the moment, but I do think it's looking much, much better. Looking at the weekly chart more shorter term, it is, as I said, that's around that sort of $12.50 mark, but I think I'd wait for it to come back a little bit, and I was talking a bit about this on my report yesterday about looking at stocks around resistance levels and how they might come back and then take off again. So I think...
So what if it takes out that prior peak there just before?
I'd be a little bit hesitant because I know a lot of people will, they'll stick a line across here and go, okay, I'll buy above that, and this is what I was talking about yesterday, but often you see things push through and then they come right back.
Actually, no, people often say, I'll wait for it to come back and I'll buy at $11.
Well, some people do that too.
And then it's probably free falling
and you're
down.
buying it in the wrong time. But I do like it at the moment. I just think I'd like to see it just ease back a little bit before taking off again and get into it. But I do think it's great from Lloyd. I think he's picked a really nice looking stock.
Yeah, I mean, if it fell through here, where could it end up?
My opinion would totally change.
But it looks like such huge support across there. I think he's got it, nailed there in terms of that. We just need to see a move in that direction. I guess I'm a little bit more willing to take a risk than what you are in terms of this move up. If it made a strong move up through that high, I think I'd be, quite comfortable, but it'd be dependent on where you set the stop loss. So let's just have a look at where... And Lloyd, you really have to be comfortable with your own choices, your own stop loss, and where you're wanting to, how much risk you're willing to take and what that means to you. Some people would buy through that high there once it goes through the all-time high, but it's really a question of what you're comfortable with.
Now, I know everybody's sitting at home there with lots of questions on their mind and they're afraid to talk to me. So maybe if you talk to Janine, you pick up your phone right now and ring 92909988. Janine would love to answer your questions and I'll keep my mouth shut. How's that?
All right, that sounds like a great idea. That sounds excellent.
I've been talking about body parts tonight.
Oh, no, let's just get back into the stocks.
All right, let's go into our next email while you do give us a call. This one is from Walter, who says, hi, Janine and Dale. Can you please give your thoughts for Iluka Resources? Now, the stock has been on my watch list for a couple of months and I'm looking to buy for the short to medium term. There has been an increase in the volume of shares traded in the last couple of weeks and the price has started to move up. Can this be a sign for a buy, and where do you guys see the stock going in the short to medium term? Also, the company will have their financial report in December. Is it better to wait for it before making any moves? Regards, Walter.
Well, I think that he's thought of some really great points there, Walter, so well done in doing that. Interesting stock choice, and a lot of people pick stocks after they've run, and I think, personally, I don't like it right now. I just see that the volume, he's talking about volume, which I think was a really great point to bring up, but we can see that the volume looks like it's just sort of, it's gone down and then it's gone up again. So we've got high volume into this fall here. To me, there's a big sell-off there just waiting to happen if it takes off to the downside again. He said he thinks it's rising, but when you look at this chart, it's been falling for weeks.
It's falling, yeah.
So just be careful about that, because you could be looking at daily reports and some brokers put out, oh, it's just gone up 20. How much has it gone up? Because these often, so gone up 7%. Well, big deal. That's nothing in the scheme of things.
Week,
So just be careful with this one, I'd say.
Okay, so he asked about waiting in December. They're reporting in December.
Personally, I would not be buying before that report, particularly.
Yep.
Given the way that this has unfolded and the bearish-looking nature of it. I just would think that that's more a flag for concern than anything. And even if it does go up, I'd say that I'd still be waiting for some time to make a call on it.
Oh, that's a tough call. So you don't wait for that whole report.
I mean, I have seen, I can tell you that I watched stocks years ago, just watching what would happen when these reports came out, just as a practice and learning to understand how these reports can affect the share price. And I found that sometimes these stocks would fall and then a takeover could be announced or something weird like that would happen. Sometimes stocks could be rising into their highs and an announcement comes out and they fall. But often in this climate where it's far more, less forgiving, if you like, I'm seeing this sort of thing happening that we're looking at on the chart.
I agree with you.
All right, Dale, it looks like we have another caller on the line. Welcome to the Australian Stock Market Show. You have Dale and Janine here. Who have I got on the line, please?
It's Chris.
Chris, how are you this evening?
Good. How are you guys?
Fantastic, thank you. And what stock have you got for us this evening?
FMG.
FMG. Oh, good stock choice. And what's your question about FMG?
It's a popular one, isn't it? But I just noticed this week that it had a lot of volume go through it yesterday. I think over 200 million. Mm-hmm. And I did take an entry earlier in the week, but it's kind of looking a bit sideways. So just wondering your thoughts on it. I mean, with everything going on, that's a lot of volume to go through a stock in a day, isn't it?
It is indeed. Good observation. And are you a short-term, medium-term or long-term trader or investor?
Well, this medium to long, I think that, as long as it doesn't drop too much, but I would like to have this long-term and add to the position over time. Okay, great. And do you have a strategy or some rules that you use? Looking at trend lines.
Okay.
But yeah, whether it breaks now or whether it continues on.
All right, great. And have you got Dale's book by any chance?
I do, yeah. I did get that maybe 12 months ago, so I do tune into the show, watch it regularly. It's a great show. Thanks, guys.
Fantastic, thank you. And I'm not wanting to put the hard word on you or anything, but are you thinking at some stage of doing one of our courses?
Possibly, yeah. It could be an option.
Because I think if you're going down this path, that would be a really good thing for you. And we're going to just tell you why when we get into FMG.
Yeah.
Because this is a long, you want to trade or invest long term, but what you're doing for yourself is about setting yourself up for the long term, if you see what I'm saying. All right, let's get into this one and we'll just talk it through. And thanks so much for bringing up a stock that I actually really like as well. And as you rightly said, a lot of other people really like it too. So thank you. All right.
Can we address the volume thing?
Yep.
Because, I mean, obviously having a lot of volume going through on a day doesn't necessarily mean anything on its own, does it?
No.
Because that could be just a crossing from one institution to another or that sort of stuff. It doesn't necessarily mean there's a lot of buying in it in terms of that's going to be
So what can an investor do when they see that?
Well, to me, investors should ignore it, really, because unless you're a day trading, volume is next to useless to you. And I actually did a video last week, I think it was on, daily fluctuations are irrelevant. Well, volume is irrelevant unless you're trading highly leveraged instruments. For short term, you're taking intraday trading and that sort of stuff. If you're trading anything more than a day, volume's almost irrelevant to you. And if you're trading anything more than about 2 or 3 weeks, it's completely irrelevant to you because it's not going to help you pick the right trade. So I think that's the first thing we need to address. Now, obviously, you want to talk about FMG because it's a great stock. I think he's bought too early.
I think he has too, unfortunately. I mean, I'd like to be saying that this is the right time to buy because I'm just sitting here waiting for this to go. So he's got the right stock, but like Dale says, a bit too early. Now, as we can see on that monthly chart there, if it does turn up and start to go, but it hasn't really shown that it's changed direction, and that's the problem.
Yep.
So not only is it under that whole trend, long-term trend, because what you've got to realise about the trend is the trend's up here, but where is it here? There is no real long-term trend yet happening. So in the short term, if we go, we're on the weekly chart there, we can see that the trend's down.
Yep.
So it's actually trending down still and hasn't proven that this low is finished. It could just as easily take out that bottom there. So it needs to do much more to convince us that it's going up.
Yeah, because this could just be a bit of a sucker's rally for people getting in before, like here it goes out, here it went up and then went down, here it went up and down, here it went up and then went down again. So is this another one? And that's really what you're saying. But there's no trend line on that at the moment to buy. There's no signals to buy from my mind on any of the rules that we teach. So, but I do love this stock and I think he's picked picked the right stock. I just don't think he has the right strategy just yet.
Yeah, and that's where those sort of decisions you can easily flip on its head so that you don't get into positions like that. That's all I'd be saying. Set yourself up in a better way for the future.
Fantastic. Well, Janine, we do have another caller on the line. You're welcome to the Australian Stock Market Show. You're on with Janine and Dale. Who have I got on the line?
You have Luke here, mate.
Fantastic. Welcome to the show. Luke, you've got a question for us?
Yeah, I was just hoping if you could have a look at AWC for me. Currently trending down, but I think it's about to turn up. It's just broken through a trend line. I'm looking to buy in for maybe the long term.
Yep.
In the past, it's had a few good up runs. Yeah, but I'm just not sure if it's a counter trend at the moment and it's going to keep trending down.
Yep.
But yeah, I'm just waiting for a higher trough and a higher peak to maybe buy in. So I was just hoping to get your thoughts.
You sound like one of our students.
I just watch the show quite a lot.
Wow, then you should be one of our students. So you're picking up a lot. You'll do even much better if you're one of our students. But we'll have a look at AWC. So you're looking more medium to longer term with this? You're looking at a trend line to buy?
Sorry?
And you're looking at a trend line to buy?
Yeah, trend line, and it's also at a long term. It's at a long term support point. So well, it's near that. It sort of went past the previous support point, and it's jumped back up. So
okay. Well, hopefully Janine doesn't shatter your analysis. Let's have a go.
No, actually, I really like your stock choice. I really like your stock
Thanks,
choice.
matey.
So good.
all right, thank you.
All right, so look, I've just got a chart up here, long term. First of all, let's have a quick look at Illumina on the monthly chart. Now, is this a stock to buy for the long term right now?
No, there's never been a stock to buy for the long term.
It's a trading stock.
It's a trading stock.
Okay, so it's quite a challenging stock too to trade. So even for an experienced trader.
Yep.
So for someone to buy it, is, and I think he's trying to put things together, which I think is really important.
I was impressed.
I know, but look, just a little bit early though. I mean, he's right in that it might have traded above the level of this low here in March 2020, but it's really just only signalling that it could be coming off a low, doesn't mean it will. And that's the risk with these sort of shares. You can really get done, you can do really well in them, but you can also be done in these shares. So just be careful about trading these types of ones. If you're looking medium to long term, you want to be prepared to let it bounce off the bottom and be going up much more into a trend. So see, this sort of trend is what you want to see the start of, but we don't have any of that yet. It's way too early for that. So I'd just say it's a really high risk time to be trying to pick this one. And I think the fact that he was waiting for some sort of pullback on it is really wise. But that's the sort
I think that's 100% correct.
Yeah.
Look, and that's the thing is me is whilst there could be a trend line entry there, and I'm saying could because I haven't drawn a trend line on.
Yep.
But to me, he was right, and it could be just a movement up, a sucker's rally before it tanks again.
Yeah, I mean, sometimes the effect of showing this long-term monthly chart is enough to tell people whether it's a buy now or not. You know, that's just the first thing that we do. So
He'd do so well in our course, wouldn't he? If he's
look,
picking this
he's
up
already
from the
picking
show.
it up.
Well, that is our thoughts on Illumina. So thank you very much for giving us a call on that one.
Well, you've been asking us questions, and each week we ask you for your thoughts. Last week we asked, say you received an inheritance of $500,000 and you decided to set up a portfolio of shares and your investment horizon was long term. There were two questions to answer, and the first is, how would you invest the money in the market? The second was, on a scale of 1 to 10, how confident would you be investing the money? We loved reading your comments, or me in particular anyway.
You did? Well, that's good. You always laugh. You laugh at everybody anyway. You love reading everybody's comments anyway.
Yeah.
But anyway, the number one response we got was from Gillian. So well done, Gillian. She said, if I was given $500,000, my natural impulse would be to look at property, though it's difficult to know where as it wouldn't go far. Doing a course and investing half in the stock market once I felt confident enough might be better, while keeping the other half in high interest mortgage funds. You are so right about it not going far in the property these days. The reality is it does not matter how much you intend to invest in the market, and education should come first or as early as possible, because this is certain that one way or another you'll end up paying for your education. I love that statement. One way you will pay for your education, and you're far better off getting getting the beam. Who worded this? Get properly prepared, basically. But it is correct, isn't it? You know, it's like you'll pay for your education one way or another. You either pay for it in losses or you'll pay for it in getting a good one.
That's correct. And the second comment was from, was it Aidan, I think? If I inherited $500,000, I would set up a broad portfolio, sticking mainly with about $460,000 in large stocks. For example, BHP, CBA, Coles, Westpac, Wesfarmers, Charter Hall, and we love you already, and $40,000 for one or two speculative stocks. And my skill level, I would say, is about a 3 or 4. Thank you, Aidan, for such honesty, and great to see that you would focus mostly on the big blue chip shares. You've got the right approach, as the probability of making gains in the smaller stocks is much lower, and they can end up eroding the gains that you make in quality stocks. We wish you well in building up your skill level with some structured training when you're ready, and this will allow you to buy and sell any stocks with confidence.
Wow, now it's awesome to see that we've had so many great comments, and to know that a lot of you put so much thought into how you would build a portfolio, so congratulations on that. Now, if you have further comments that you want to make, we look forward to hearing from you.
Thank you so much to everyone who did comment last week. I really enjoyed reading your comments after the show, so keep them coming. This week's question is, say you had 2 stocks in your portfolio and one had been rising for some time and was in profit by, say, 20%, and the other one was in loss by more than 10%. Do you believe it would be easier for you to sell the one in loss or the stock that's generated the profit? Please share the reason and why.
Well, that creates a dichotomy, doesn't it? Wow. Now, I know, Janine, you'll be racing back to your desk as fast as you possibly can to see everyone answers again after the show. So I think everybody better start typing right now, as I'm sure everyone watching will not want to disappoint you, Janine, because I don't want to disappoint you, I tell you. So please get typing now. She really does get excited about your replies, too excited sometimes, I think. And you'll find it is a great exercise in building your own psychology by typing out your answers.
So true. And remember, if you're listening to us on a podcast, we do not want you to miss out. So you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're using. If you can share a link to our show with your friends, we would really be grateful.
Yeah, now I want to remind everyone to head over to talkingwealth.com and check out Talking Wealth TV. And whilst you're there, remember to enter in to get your chance to win $50,000. So just go to the website, talkingwealth.com, and do it straight after the show here.
Also, if you've enjoyed tonight's show, please help us by giving the team a big thumbs up. And that means that you have to click that like button underneath our video to let us know that you've enjoyed the show. If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au. And remember to include Wealth Within Live in that subject line.
And we really do appreciate your support, and to show your support, you need to subscribe to our channel and hit that subscribe button right now.
Well, that is it for tonight's show. We do hope you've enjoyed what we presented tonight. We've so enjoyed receiving all of your emails, and thank those who called into the show. We loved the opportunity to chat with you personally.
As always, thank you for joining us, and we do hope you have a great week. But for now, goodbye, good luck and good trading.
Bye for now.